Tax season in Canada comes around once a year, and most people are just banging their heads on their desks or the walls because it is such a stressful time. If you have kids on top of that, it just adds to the mess. However, for us financial nerds, we're just so excited about tax season because most of the times we've actually overpaid in taxes or used different sheltering vehicles for our income in order that we would get back a rebate from the government at the end of the year. And usually this rebate is quite a large sum of money, in the thousands of dollars. Ever since I started working, I've learned how to optimize my taxes for the current life situation I'm in, looking into all the different government rebates that are available for my age or my current life stage, such that I can optimize the amount of money that I get back from the government. However, for people who are not as tax savvy, you might be losing hundreds of dollars or even thousands of dollars each year by filing your taxes in an incorrect way or just giving it to an accountant and they're taking a large fee from you. Taxes shouldn't be that stressful, and there's a lot of software out there that will help you to do your taxes and make it fairly easy for you to do. It might only take you an hour or two. But some of you who are a little smarter are probably scratching your head and thinking, well, this money that we're getting back actually originally belonged to us. But nonetheless, when you think about it, just having this money come into your bank account as a large sum is always quite nice. I understand that may not actually have been just like free money from the government. However, it is exciting to just get a large boost in cash infusion, and especially right now with the markets down low, it's a great opportunity for you to take your tax rebates and just put them into some sort of investing account and start to buy into this market weakness. So in today's video, I'm going to talk about one way how you can hack the tax system through RRSP contributions. And I'm going to be going over the do's and don'ts. So basically when you should invest in your RRSP and when you shouldn't, because there are different cases for each one, depending on where your life stage is and what your income is and what your future looks like. Without further ado, let's get right into it. Welcome back to The Fire Grind. On this channel, we talk about all things to do with personal finance, especially how you and I can become financially independent and retire early. In today's episode, as I mentioned before, we're going to be going over the RRSP vehicle and how you can use this to shelter your income from the government and keep more of it in your own pocket. The first reason I would use my RRSP is if my income is not going to climb very much in the foreseeable future, because the present value of money is a lot greater today than 10 years from now. So I'd rather get the money earlier, and I know that I'm not getting any more tax advantage by saving my RRSP contributions for a later date, so I might as well take the rebate now and start investing that money and growing it now. The second reason I would use the RRSP today is if my income just crossed over a pretty major tax bracket. For most of us, that would be around the $50,000 mark and the $92,000 mark. And the reason I say this is if you look at the tax chart that I'm just going to post here, there's quite a big jump in tax percentage when you cross these 2 points. When you cross from $48,000 to $49,000 to be exact, your tax bracket actually goes up by 5%. And when you cross from $91,000 to $92,000, you're talking about a 4% increase. The other places along the way are actually maybe 1 or 2 or even 3% increase, which is not as much as 4 to 5. So if you've seen your salary increase since last year to these new brackets, you might want to consider start using your RRSP contributions to get money back because you're in a higher tax bracket now. The third reason as to why I would use my RRSP contributions today is because I might have a large purchase that I want to get tax back so that I can fund that purchase right away. This might be if you're buying a new home or just buying a new car. So these are large expenses that we see in our lives, and it would be great to just have some extra cash back from the government at this point in time to be able to use it towards a large purchase rather than getting a loan. The fourth reason as to why I use my RRSP as a contribution vehicle to reduce taxes and get a rebate back is because I know I'm buying a home in the near future. And there is a special case that you have to be in order to make the RRSP worth it for you. If you're a first-time home buyer, and I'll list the conditions over here for you to see if you qualify for that. As a first-time home buyer, you're able to withdraw from your RRSP tax-free. And this will just help you with your down payment so you have less mortgage. The only caveat is that you have to pay back this amount that you've withdrawn from your RRSP within 15 years. The money that you use to pay it back is not tax deductible again though. So there are a lot of factors to weigh in if you're going to use your RRSP as part of your down payment for your new home. Now that we've went over all the reasons why I would use an RRSP, let's go over the reasons why I would consider not using an RRSP. And the first reason is if I'm just below those new income tax brackets that I mentioned before, the $50,000 mark and the $92,000 mark. And the reason is most companies will continue giving you raises over the years, or if you switch jobs, you're probably going to a higher paying job. So for this reason, you know you're going to cross over that new tax bracket. And therefore, for me, I personally would think it's more advantageous to save my RRSP contributions for later years when I cross over that large tax bracket and start paying 4 to 5% more in taxes. Then I can draw my income back down to the previous tax bracket level and actually get an extra 5% back. The next reason as to why I wouldn't use an RRSP is if I was in a low tax income bracket. And the reason for this is there's better vehicles for investing, like your TFSA. The TFSA is great because everything that you earn is completely tax-free. It doesn't matter if you withdraw it and you've gained 200%, 2000% on your investments, it's still completely tax-free. However, with your RRSP, sure, today you may be getting back 20%. However, in an investment, a long-term investment especially, you're going to be getting probably 100, 200, 300% gains on these initial investments. And by the time you retire, you can maybe withdraw $50,000, $60,000, $70,000 a year. And that's going to put you in a higher tax bracket than what you're currently in. So the money that you put into your RRSP and you start withdrawing it later on, that money that you withdraw might actually be in a higher tax bracket. So in the end, it's screwing you over. So I think it's best if you're in a low tax income bracket that you look at the TFSA as your initial investment vehicle, and then any leftovers, maybe consider the RRSP. The last reason I would not use my RRSP is if I was going to be putting the money that I put into my RRSP into risky investments. The reason I wouldn't invest in risky assets in my RRSP is because any loss that I incur in the RRSP is not tax deductible. However, if you're in a non-registered account and you incur losses, you can carry those losses up to the day that you equalize those losses out with gains. So if there's anything that you're unclear on and just want more explanation, leave a comment down below. Smash the like button if you plan on doing your taxes this year yourself and saving on those accounting fees. And click the subscribe button if you want to hear a bit more about my tax strategies in the future. Keep up the grind and have a great day.